traders at Access Bank say investors will be heavily focused on the 13.6 billion naira treasury bills auction today. Dimeji Obasa, a fixed income dealer at Access Bank, joins me now for a midweek market update. Thank you so much for your time today, Dimeji. And let's first get an insight into how the week has been for the markets.
Thank you very much for having me. What we've seen this week has been increased volatility, starting from Monday, where we had the FGN bond auction where yields closed significantly lower than market expectation. Following that auction, we've seen spikes of rally and then pullbacks. Going into this NTB auction, the general sentiment is for another reduction in the stop rates from the previous closing. First, because of the increase in demand. Second, because of the relatively lower amount on offer at this particular auction. As you noted, it's just about 13 billion on offer across the three maturities, which, I mean, would not go anywhere. But the expectation is that the DMO or the CBN will oversell at this particular NTB auction. But even at that, we still expect yields to close lower than the previous auction.
Yeah, but still on the auction, as you're looking at the trends that have played out this year, for you, what sticks out?
So what sticks out is that this year we've seen a significant increase in yields across board. We've touched unprecedented levels, as high as 18% on the longer dated bonds. Even with the treasury bills, we've seen significant increase when you compare them to the average yields from last year. We also seen a change in the DMO stance as it relates to selling NTBs, overselling NTBs rather, at the auction. Prior to now, what the typical thing we would notice at the auction is that we would see the DMO sell exactly what is on offer. But in recent times, we've been seeing significant overselling from the DMO just to basically put out the securities to the market and meet their quota for increased borrowing.
Yeah, it brings me to my next question here, which is talking about the overall debt strategy of the Debt Management Office. And I'd like to get your assessment of this so far, and if you think we can expect similar stance going into next year.
Did you say the overall debt sustainability?
No, the overall debt strategy of the Debt Management Office.
Well, for this year, the strategy was very clear, was to borrow as much as possible from the markets, which I can say that they've done quite successfully. They've been able to raise above what was on offer at virtually every bond auction, and they were also able to significantly oversell at most of the NTB auctions. Going into next year, given the budget deficit that we have, I would presume that the strategy would be to borrow as much as possible from the markets. First of all, to roll over every maturity next year on the NTB side and possibly increase the amount that they're able to borrow from the markets. On the bond side, we would see most likely a new 30-year issue next year, as well as the reopening of the current bonds that are on offer. We note that the 2053s, which was the longest dated bond that the DMO sold at the December auction on Monday, sort of has reached the cap of the amount outstanding. So the general consensus is that they were likely to see a new 30-year bond going into next year, while they maintain the other bonds that were on offer at this particular auction. That's the 2029s, 2033s, 38s, and then likely a 2034 bond going into next year. 2054 rather.
We're almost spent with time here, Dimeji, but very quickly, I'd like to get your take on the performance of the markets this year, looking at the bond side and even the T-bill side.
Again, what we've just seen this year has been a significant increase in yields. So investors have had a situation where they've gotten more value for their money. On the bond side in particular, we've seen about, compared to where we started the year, we've seen about a 300 to 400 basis points increase in yields. Although that has come off slightly from the highs of 18. On the long end, we're now currently around 16.5%. On the NTB side, again, we've seen a significant increase as well, although we are also coming off the highs. For today's particular NTB auction, we're expecting another reduction in yields to close around 13.5%, coming from the 15.75% that we saw at the previous auction, and then also from the 16 levels that we've had previously. So going into next year, we would expect that as the demand for securities increase, the DMO's appetite for securities would increase to match that. So we would likely see rates increase slightly. It won't be as aggressive as we've seen this year, but we expect that rates would increase slightly going into next year.
All right, Dimeji, let's leave it there. Thank you so much for your time today. Dimeji Obasa is a fixed income dealer at Access Bank.